Hi, everyone. Thank you for joining us for today's webinar. My name is Megan Martin. I'm a real estate communications consultant, and I'll be co-hosting our expert panel for you today, along with Teddy Kyres, president of Orbis Mortgage Group. We hope you're all staying safe and doing well amid the COVID-19 outbreak. I know it's been challenging. We've been getting a ton of questions about the real estate industry and in particular, commercial real estate sector. Teddy?
Yeah, so we've been a lot of people are nervous about the whole environment right now, and they're very confused and concerned about everything that's happening in the commercial space. And I had the vision of putting some of the leaders together, and I believe we have some of the commercial leaders in the market right now together to discuss it and all different aspects of the industry. That there's some points that maybe people haven't seen or have questions on, and so we're here together to discuss that. So. Today we have a few panelists. Jonathan Gagnon, he's the Vice President of Commercial Lending at Orbis Mortgage Group. We have Sebastien Gatti, who's the Executive Vice President and Commercial Real Estate Broker at JLL, Jones Lang LaSalle. Chris Karambatsos, who's a commercial real estate lawyer and the founding partner at KRB. And Erik Langburt, who is the Executive Vice President and Real Estate Broker at Cushman and Wakefield. So these four panelists here are, like I said, the leaders in the industry, and we're excited to have them here today.
Absolutely. And we will have an open question and answer period after our discussion today. So if you're listening, watching, and you have questions, please message us. We will get to your questions. So let's get right into it. To kick us off, let's hear from Jonathan Gagnon with a look at the commercial lending environment as well as rates. Jonathan?
Everyone, hi to the panelists. Thanks for being there, everyone. Hope everyone is safe. Commercial lending environment. Right now, what we're seeing is most of the lenders are taking kind of a wait and see approach. There's a lot of questions on the property valuation, on the market itself, on when the business is going to be back up, and a couple of the lenders though that they're kind of taking advantage of the situation, whether they are aggressively pursuing new business. So my recommendation would be not to wait, to basically don't hesitate to ask for help, because there's still lenders doing business out there, though being more conservative. So we are getting a lot of questions about financing, about rates, about loan to values. So basically, it's common sense right now that the lenders that are still lending, they're being way more conservative in terms of the loan to value, in terms of the preparation you need for the file, in terms of the explanations on the impact on your tenants, on COVID-19, on a lot of programs that used to be available. Especially in the owner-occupied area, where there used to be financing available up to 100%. Now it's really more challenging, but again, there's some good opportunities and some really good rates still out there.
Okay, great. And what would you say? How would that compare to the multi-residential lending environment as well? Can you give us a walkthrough of that as well?
Well, that's still up and running. For multi-res, most banks are they're still lending, without any problems. If we're talking about conventional lending, we had some banks going up to 80% loan to value. That's really, that's something available. If we're talking about CMHC, there's been, again, if we're talking about the lending itself, it's still up and running. Though most of the purchases transaction, they were put on hold recently, but we're still seeing some action in that market. The lenders there's still some aggressive rates out there. Some of the lenders, though, I'm talking about the CMB lenders through CMHC, they're putting new business on pause. Let's not forget here that they're getting pretty much flooded with inquiries about payments deferral, and all kinds of stuff like that. So basically, it's important to expect a higher turnaround, for purchases and for refis also. But again, it's there's more opportunities, I would say, in the multi-res area.
Okay. And what about the climate for private lending, for alternative lending?
Well, I would say private lenders are thriving right now. There's opportunities. I really think that we do have a lot of inquiries, because a lot of people, they know one or two private lenders, and it's hard for the clients to understand the reality and understand the market for private lending. Okay, so basically we do have a lot of inquiries right now about, the rates, how competitive the lenders are, and I really think we can make a difference at the moment with by helping negotiate a better rates because we have access to more private lenders.
Just a quick question on that.
You're muted, Teddy.
Okay, a quick question on that, Jonathan. I know on the residential end and not the semi-commercial or commercial or multi-res, but on the residential end, it's a little bit longer in getting things approved by the banks. And I know you touched on it a little bit, like what's the timeline to get clients approved these days versus previously?
Right now, the banks are really being unpredictable. I mean, we've closed quite a bit of business last month, as you're aware. We still had a good month, in spite of COVID-19, but in terms of, our contacts and bankers, they all have the best of intentions, right? But there are a lot of things that are under their control. Right now, the priorities for the banks, and something we need to understand, so they're really focusing on their existing customers. So that's their main concern, and then they're going to take new business afterwards. So basically, I would recommend people to, if they have a project, to get started maybe, earlier, and to expect, a higher turnaround period of time, which is totally normal in this context.
Great. Well, thanks, Jonathan. So Sebastien, I'm going to get to you a little bit. From the
sorry, Teddy, can I interrupt for 2 seconds?
Sure, go ahead, Chris.
Just because it's not in my speaking notes, but I've seen a lot of people get balance of sales to finance deals that are in the pipes. So vendors that are hedging that things will get better. I think we've done about 3-4 deals in the last couple of weeks where the vendor basically said, look, how much do you have? Pay it. I'll give you 12 months. And when things get figured out, take your time, get your financing, pay us, get the interest. So aside from all those avenues, there's also this as something that I've seen people take advantage of.
Yeah, and like on that point, that combined with private mortgages, like there's still transactions, still ways you can get financing, and you have to just be a little, you have to work a little harder at the deals, and so see the different solutions out there. So thanks for that, Chris. So Sebastien, so on your end, like commercial landlords, with COVID-19, what's been the impact on them on rent collections across Quebec, and how are landlords dealing with, their own mortgage obligations out there?
Right. Well, thanks, Teddy, and thanks, Megan, for organizing this. I would tell you, to make a long story short, landlords have been pleasantly surprised with April collections. Now we only have one data point right now. We'll probably know a lot more in May, in about a week's time from now. But again, landlords were a little bit anxious, a little bit nervous coming up to April 1st. The rental board or the Régie de Logement kind of put all eviction notices or hearings on hold. And landlords weren't exactly sure which tenant actually needed, rent abatements versus which ones were going to be taking advantage of the system. But, I had heard about a survey that was done for about 150 landlords across Canada. On the first day of April, there was 75% collections. By April 6th, a week later, once the federal stimulus package and the federal aid programs were in place, that number was closer to 95%. Of course, it's a case-by-case basis, depending what asset we're talking about, whether it's an A-class, a B-class building, what type of tenants you have in the building. But the overall message from landlords that I've been speaking to on a daily basis is they were very pleasantly surprised on rent collection. I think that just goes back to the basics. People need to put food on the table. People need a roof over their heads. If they have the income and they have the support from the federal government, they're going to pay their rent. I've heard people even pay their rent a little bit early just to make sure that they have a place to stay. In speaking to these landlords, I would tell you, it's become evident there's not like one strategy that fits every landlord. Everybody's been flexible. One of the bigger landlords in Canada I've spoken to basically put in place a program which allowed tenants to pay 50% of their rent in April. This is prior to April 1st, and to pay in installments 3 months later. The same thing for May, or to pay in installments for 6 months later. So in these uncertain times, I think it's it's cautious to be flexible with your tenants because we're in this together. The May collections, June collections is now the new question. So landlords are saying, you know, April is good. We weathered the storm. How's it going to look in May and June? Now that you have the CERB program in place, you have the wage subsidy in place. I personally think collections are going to be as good as April. So knock on wood for that one. And going back to that, it's really just, you know, it's not a blanket policy. It's really building by building, what type of tenants you have in the building, which of these tenants are actually using these financial programs. But I would tell you, if April is in any indication as to what's going to happen in the next 2 months or 3 months, I feel positive about where collections are going to go.
That's good news there. So it's nice people are working together trying to find solutions in this tough times here. Now, from a pricing perspective, since you obviously you're with the multi-family assets, have you seen a change in pricing? Have you seen a change in cap rates out there? What's the market on that end?
Yeah, I mean, we have a few deals underway at the moment. I mean, to simply put, I would say no. I don't see any material change in values. However, this is early on. It's tough to say if this is going to be, you know, what the long-term impacts of this is going to be. But again, like based on April collections, based on what we're seeing, you know, coming into May, I think actual rental values are going to stay in place. I think it's important to note that the multifamily sector specifically I'm talking about here has always been resilient in downturns and in, call it these recessions or economic downturns. You know, in real estate, we have this term, you know, in these times, people will flock to beds and sheds, right? So, you know, stable defensive assets, multifamily, call it core long-term industrial leases. So, you know, really it's to preserve your NOI or to preserve your capital. People may take a little bit of a break on, let's say, the value add opportunities, but I would tell you that there's going to be a flock towards stable assets. Vacancy rates remain extremely low in Montreal. I think anybody will tell you that. The fundamentals in the market pre-COVID-19 were extremely strong. Macroeconomics, you know, employment rate, GDP growth, the surplus on the federal budget, you know, everything was shooting in the right direction. So I don't see a material change in multi-res specific asset values. Maybe there'll be a dip in terms of transactional volume, as Jonathan was saying, you know, in May and June. And then the last thing I would point out is I think there's going to be a difference between the private sector and the institutional sector. And what I mean by that, institutional, maybe, you know, deals of 20 million and up. On the private side, I think we'll continue seeing private guys, and I've seen it, you know, on a day-to-day basis, be active in the space. Even now, during this uncertainty, they're looking to place money in something that's safe, away from, you know, the stock market that may be more volatile. You know, they're looking at what the interest rate is, which is very low today, versus what kind of cap rate they can buy a building at. So they're looking at that spread. On the institutional side, I think they'll be a little bit more cautious. You know, they're more IRR driven, so they're going to be looking at, you know, what vacancy is, what bad debt's going to be, what is rent growth going to look like in 3, 6, 9 months from now. But again, they're going to be selective on deals, but I think the demand is certainly still there. We're seeing deals still close. So maybe a small dip, but in terms of the actual value of the asset, I think multifamily is going to be quite resilient.
Great. Just going back to what you were saying about landlords, I've heard the amount of flexibility that they're showing is unprecedented. How would you comment on that? And are you surprised by it?
Yes and no. I would tell you, you know, we're on the phone with landlords every day, lenders every day. I think at the end of the day, the responsible landlords who have owned buildings, who know, you know, who know how to operate these buildings, understand that, you know, cash flow is king, and keeping your tenants in the building is going to be important. You know, right. These are unprecedented times. I think the landlords who are more flexible, who are dealing with tenants on a case-by-case basis, are the ones who are going to come out on top here.
Great, thank you. Chris, I'd like to pivot over to you. As a real estate lawyer, you're in a pretty unique position to discuss the fallout from this. What types of disputes are you seeing at this point?
Smart disputes and less smart disputes. I mean, the one thing about this type of situation that propels everybody into the unknown is that it does, and where you have the courts that are telling you we are pretty much closed, we will not listen to any sort of safeguard order or anything to do with rent, is that it sort of forces people to revert back to common used method of dialogue. One expression that's come up often is a bird in the hand is better than two in the bush. And, Sebastien said cash is king, and cash is king, particularly at the tail end of what's over a decade of a bull market. And what happens in times of bounty is people let their guard down. So I think you had a lot of people that maybe were a little bit over levered. If you compare it to what would be a more conservative leverage ratio, you had people that maybe weren't in a great cash position because it's been such a transactional market. People have been buying, people are sitting on assets that aren't stabilized. And so you've seen a lot of landlords going and saying, look, can you pay me? What can you pay me? Can you pay me 40%, 50%, 60%? So pay me that, and we'll defer the rest based on whatever, 12 months, 2 years, etc., and we'll figure something out. So I'm seeing a lot of deals. I'm seeing a lot of opportunities for landlords to sort of go back and get some sort of other non-monetary concession from tenants. I've seen that quite often. So for example, if you're under market on a long-term lease, look, I'll give you abatement or I'll give you deferral, but I want you to terminate your renewal option. Or I want to introduce a relocation right because maybe the guy's been percolating in the back of his head that, you know what, I want to redevelop this property in the next little while. So I'm seeing a lot of creativity. I think and I think we're going to talk about the government programs, but they introduced this government program now, the rental assistance program. And I just feel that the timing that they did this in is going to undo a lot of the good work that I think has been done, in the sense that people came to deals that were good deals, that were fair deals. Because, everybody's talking about force majeure. Force majeure doesn't really apply in a leasing relationship. So really what it comes to is, how do you share the risk? And I can tell you that most of the template leases that landlords use, that risk falls on the tenant. So, but the landlords are aware that they'll have to share some of that risk, and this program comes in, and now maybe the tenant accepted to share some risk, and he's going back to the landlord and saying, well, no, I want to retrade off a deal that we already cut in April for the next little while. And I suspect that that's going to open a little bit of a can of worms moving forward in terms of the deals that have already been made.
Right. Just speaking about shared risk, how would you recommend or how do you think landlords and tenants can both protect themselves from these situations?
Dialogue.
Okay.
Just be honest. Like, you know what? Even I always say nobody actually thinks that they're a bad person or a bad business person. Everybody just has a different narrative of a situation that differs from yours. And the one thing that I find is, get on the phone, speak to the person. Do you want to see my balance sheet? Do you want to see my revenues, my number? Let me give you a statement, because the problem is you have what I call bad actors. And the bad actors are the people that have looked at the situation and said, well, there's uncertainty, and so I am going to just conserve cash. And even though I'm a public company, even though I have a strong balance sheet, even though I'm still operating my business, maybe I'm not doing 100% of my revenues, I'm doing 40, 50%, I'm going to send an email to all the landlords that I work with and say, I'm not paying you for the next 4 months, knowing that there's nothing that the landlord can do about it, in the sense that it's very difficult to be in front of a judge at the moment. And those bad actors have sort of tainted the playing field a little bit. So what I tell both sides is, have a dialogue. I mean, you can't squeeze blood out of a rock, and categorize who you're dealing with. Are you dealing with a mom and pop? Are you dealing with a national company? Are you dealing with a medium-sized company? Are you dealing with a company that has completely stopped operations? Like, know who you're dealing with. and know what you're trying to know what you're trying to protect. I mean, if you have a 10-year lease, are you trying to protect a 10-year lease relationship that's worth millions of dollars, or are you trying to protect 2 months of revenue? And common sense. I can't say this enough. Just common sense. I think every father, I would tell you that in the last 2 months, I've sent from our office probably less than 24 letters of demand. Because to me, I'm telling people, guys, that's the last resort. Because it's basically, you're not going to get anything from the tenant. Tenant's going to go see his lawyer. It's going to go into the system. And then who knows? I mean, right now, the courts were already, backlogged before this. So you can imagine after this how it's going to look like. We are only a microcosm. Real estate is just one part of a broader economy. Those courts serve us and everybody else. I can tell you there's going to be a lot of disputes in the M&A field. There's going to be a lot of disputes commercially. So again, try to get what you can today. Try to cut deals that make sense. And then go to your bank and say to your bank, if you're the landlord, here's the deal that I cut. And give your bank comfort that you're not going to have issues.
Okay. Chris, from a landlord perspective, if you have a tenant who's acting in bad faith, who can pay, but he's taking advantage of the situation, and obviously the courts are closed, as you said, and it's really, so is that court case going to be pushed to the end? What do you think is going to happen with those?
There's different. I mean, again, it's all about pressure points. Disputes are like a game of chess. Find out where the weaknesses are. The one thing about the larger institutional bad actors is that you're dealing with people that have jobs. You're not dealing with landlords that own their own real estates that are going to fall on their own swords. People don't want to make decisions that can put their jobs in peril. So, for example, one of the situations, I was acting for a landlord, and it was a big national retailer, and I basically sent them a letter, and it was like, look, we're safeguarding our rights. We'll go to court whenever we go to court. We're letting you know we're reserving that right. Oh, and by the way, you have a termination right that you were allowed to exercise in 24 months. You can no longer exercise it because you're in default. You had an option to renew. You're no longer allowed to exercise it because you're in default. You had this. All those rights that we usually say are subject to the tenant not having been in default or major default during the term of the lease. So now they're scared. Now it's not just, I impressed my boss because I was able to, either defer or abate the payment of rent. Now it's like, wait a minute, I'm jeopardizing a potentially, good location, good situation for the company over the long term. So again, it's just about being creative. Some people have letters of credits, and we've explored, possession is 9/10 of the law. I shouldn't say that, I'm a lawyer, but leverage is leverage. So if you have a big letter of credit that basically you can draw on it by going to the bank with a certificate that says they're in default, you may want to consider that. Look at your language on your security that you're holding, deposits, security deposits, etc. Speak to your lawyer. I cannot stress that enough. I mean, I've seen so many landlords and tenants try to work out deals, and I get it. We're the last people you want to be paying in a situation like this. You want to be, your operations, your employees, your rent, your key suppliers, but go see a lawyer, because I've also seen, you want to talk about protecting yourselves. When you cut a deal, but you leave all these gaping holes in the document that's supposed to reflect the deal, and 1 month later, people are still in a bad situation. And what are they doing? They're saying, no, that wasn't the intent. So that's the advice that I have for people.
Okay. And for people who do really need the help, you had mentioned relief programs. I know the government, various levels of government have implemented a slew of programs. Can you describe the options that are available for tenants, as well as what the qualification criteria are?
Right. So I'm the worst person to ask about these wage subsidy programs. I would say that everybody should speak to their accountants. The accounting firms have been very on top of the wage subsidy programs, the $40,000 small business loan programs, etc. So a lot of these firms, if you're a larger organization, they're happy to do a teleconference and give you a presentation on the details, etc. There is this secret program, the Canada Emergency Commercial Rent Assistance Program. It was announced last week. The details haven't been fully disclosed. I suspect that the iteration of the program that was announced will change. And one of the things, for example, the program applies to small businesses, which is defined as small business tenants that pay less than $50,000 per month in rent, and that have temporarily ceased operations or had a 70% drop in pre-COVID revenues. And the way that it works is that SECRA is going to cover 50% of the rent. The landlord is expected to give a 25% abatement, and the tenant would cover 25%. And it's supposed to be in place by mid-May. They were talking about CMH, the Canada Housing Mortgage Corporation, managing the program. And it's retroactive to relief for April, May, and June. Now, the issue with the program is that, or an issue that's come up with my clients is they are going to pay the 50% landlord. It's a forgivable loan to the landlord. So it's the landlord, the tenant can't force the landlord to say, do it. And a lot of landlords are coming to me and saying, I cut a deal a month ago. I don't really want to give up 25% of the rent if they've already agreed to defer the payment to later on. So you're seeing a lot of these quibbles now coming up between landlords and tenants. And the other issue is this program pays your mortgage lender. But, you know, hello, guess what? Some people don't have mortgages on their properties. And where the big problem is, this is primarily for retailers that have been completely closed, right? And some of the biggest malls in the country are owned by pension funds that don't have mortgages on these properties. So I suspect that by next week, the government may tweak it and say, you know, if you have a mortgage lender, it'll be paid to your mortgage lender. If you don't have a mortgage lender, they're going to have to address it because otherwise I just see it as, you know, to use Trump's favorite term, it's unfair, you know.
Right.
So,
I've heard it described right now as a one size shoe fits all, which is just not the case, like you said, right?
no, and I don't want to throw them under the bus. I mean, you have people that are doing things, and I've spoken to a few tax experts and accountants that have been dealing with the government and that are helping clients navigate these programs. And they're like, look, you're talking about people that would normally take a year and a half of work to do things, and they had to do it in 4 weeks and 5 weeks. So there's obviously going to be kinks, and I think we all have to be understanding. But I would say that I expect we may see modifications to the program when they release in full detail how it's going to work. Okay. And I just want to point out one thing that, you know, these programs are all great. I don't know how quickly they're going to be able to disperse, and a lot of people have cash flow issues. So you have to consider whether you want to wait until the details of the program come, go back to your tenants, give the 25% abatement, this, that, and whatever, relative to or versus maybe an existing deal that you already did in place that saw you get paid for those months.
Okay. Thanks, Chris. Erik, over to you. We just covered demand for help. How broadly are you seeing tenants asking for relief, and how have rent collections been coming in for landlords at this point?
Sure. So I guess I'll tackle this by sector, talk about office, retail, and industrial. And just to keep in mind that this is really all anecdotal at this point. I mean, we're having hundreds of conversations a day with landlords across the board. What we're hearing from April, very much along the lines of what Seb was saying earlier, rent collections for downtown office buildings have really been, you know, on the low end at 85%, all the way up to 95, even 100% in some cases. So landlords have definitely been pleasantly surprised. The numbers don't seem to be that far off in the suburbs either. They seem to be very much in line with that 85, 90%. In terms of rent relief requests, though, for the month of April, landlords received about rent relief requests from about 30 to 40% of their tenant base. So that's why I think they were pleasantly surprised, was when you had 30 to 40% of your tenants requesting some kind of relief or deferral, and then you get paid between 85 and 95% of your rent, you're obviously very happy. The situation in retail seems to be a little more challenging. Collections came in probably around the 60% mark, 60 to 70%. Based on the conversations I've been having, it even seems a little high to me. You had rent deferral, rent relief requests from about 40 to 50% of the tenant bases. Now, these are stores, you know, don't have clients coming in, and you know, restaurants who can't seat patrons. So a little bit more of a challenging situation. The interesting thing I heard about retail, Chris was talking about bad actors. The numbers I've been getting is of the rent relief requests, about 80% were legitimate from small and medium-sized businesses. 20%, were good tenants who didn't ask at all, and then you had 20% who were just purely being like really opportunistic and being bad actors, just trying to take advantage of the situation. When it comes to industrial, the numbers are actually much better. Industrial tenants, and especially in high box industrial, are performing really well in this environment. There were very few requests for rent relief. Where the rent relief requests were coming in was really in small bay product. So those are kind of like the 3,000, 6,000, 9,000 foot industrial tenants. But there's still demand out there in the market for large block space. And those tenants are continuing to pay because they're providing all the frontline services that we need in this time.
Okay. And if you are a tenant, how would you approach rent relief with your landlord?
I'm never going to do a better job than Chris Karambatsos. I tried to grow as nice a beard as him, but I can't even do that. But he did a terrific job. I mean, it really is all about being open and transparent and having having that dialogue. And it's more of an art than a science. That's really what it comes down to. But what I've seen on the landlord side in terms of how they're dealing with it is some landlords have been really formal about it, and they've set up rent relief committees. And then when a tenant asks for rent relief, they'll send them a rent relief request form, and they have to provide financial statements, talk about how they're going to emerge from this, show them their business plans, show the hardship. That's been a big thing, is you're telling me you're in a bad situation. Show me. Have you had to lay off people? How far are your revenues down? And if I'm giving you relief, I want to know that you're coming. You're going to survive and be able to pay me the rent down the line. So you have kind of those really formal, procedures in place. And then in other cases, you just have, the Chris Karambatsos special of having dialogue one-on-one. Let's sit down. Let's have a teleconference. Let's figure this out. I want you in my building long-term, and the tenant wants to be there long-term. It's just a cash crunch. And we've seen a lot of that. Where I've seen the most leniency from landlords is with respect to retail tenants and with respect to sectors that have been hit hard, like the travel industry,
right,
the hospitality industry. So the landlords are being really understanding, and if they are giving relief, they're trying to focus it on those tenants because they understand that it's kind of like an existential threat for them. Actually, Cushman Wakefield produced a report on how to approach rent relief, or I shouldn't say how to approach it, but sort of like 10 considerations before approaching your landlord, asking for rent relief. And some of the things that are really important that we don't talk about, if you're a tenant, you have a brand and a culture. You had negotiated a lease in good faith and gotten concessions from the landlord in terms of free rent or tenant improvement allowances based on your credit, based on your brand and what you're going to bring to the building. And now you're turning around and asking for rent relief. So yeah, it's just a consideration before you go in, and ask for maybe a 3-month holdover. Do you really need it? Are you taking advantage of the situation? Or is this a credible ask? And I think, it's all about, long-term relationships here and being open and transparent, as Chris said.
And Erik, on that point, that's the current situation. The outlook. What do you think the 2020, 2021 outlook is going to be for the markets out there for you?
Okay, so I'm going to answer this question in two tranches. So first thing, being an office leasing guy, that's kind of my core business. I want to talk about the future of workplace. I think that's kind of like a really big topic right now, and everybody's been picking my brain on it. So I think it'll be valuable to sort of talk about that for a minute. The work from home trend is irreversible. People are understanding that it's working, everybody has a technology, it's working well. You're hearing, reports in the media that TD Bank is, they're going to continue this way with their, for their call center operations. JP Morgan said something similar in the US. Can we be productive at home? Absolutely. Are people possibly even being more productive? Very, very possibly. My comment to that is, at what expense? The mental health aspect, not being able to engage with colleagues and clients and have face-to-face meetings, I think is, I don't think you can overstate the importance of those things in your day-to-day interactions. What I've been hearing across the board, I've been hearing numbers kind of like all over the place in terms of what percentage of a company's workforce is going to be work from home, anywhere from 5 to 40%, with the bulk kind of being 10 to 15%. So what impact is that going to have on office demand is the big question. And, I think what kind of offsets the potential work from home impact on square footage is the kind of the de-densification and everything that's going to have to come into place after COVID, the social distancing measures. Will companies now need more space because they have to create more separation between their employees? Does that potentially offset the percentage of employees that are going to be working from home? Right now, we're kind of calling it a net neutral. You'll need to take on more space for this new office concept, but you're also going to have a percentage of your people who are going to be working from home.
And on that point, Erik, like just from a personal perspective, I know that, people work at home, and I've heard that the first couple of weeks they were happy to work at home, but now people actually want to get out and see other people live. And so I think you're right on the mental aspect, the psychological aspect, that people like to work at home, maybe not 100% of the time, maybe a certain percentage they want to be home, and they'll still need an office, right? And so I don't think it's going to disappear, the office part of it.
Yeah, most, and this will kind of get into the second part of what I wanted to talk about. Most of the office landlords and investors we've been speaking to have been really, they're staying long on office space. They believe that the sector is going to be strong coming out of this, maybe not immediately, but that's because we're more in will likely be in a more recessionary environment coming out of this, less to do with demand for actual office space. They believe that this huge work from home experiment is good. Certain people, it'll be more of a tool for flexibility, to allow people to maybe not have to come in at rush hour, and maybe allow them to leave earlier. And, if they have doctor's appointments or whatever, they can work from home. But the office isn't really going to go anywhere. From the people I've been speaking to, kids, dogs in the background, that kind of thing. So it's, most investors are still very long on office space. With respect to investment in office and industrial, what I'm hearing is, on the vendor side, people still think their properties are worth what they were, pre-COVID. But on the acquisition side, you have a lot of people who are just waiting for that shoe to drop, a lot of patient capital, and they're being really, really selective with opportunities. I'd be curious to hear, you heard Seb say earlier that he's kind of not putting anything to market right now, which I think is, smart. We're not seeing on the commercial office, industrial side, we're barely seeing any product come to market. Really, I can think of 2 opportunities I've seen that have been launched since COVID. So it's really, really light on the volume side. And investors are going to be very patient with their capital and selective.
Thanks. And so, Seb, on your point for the outlook for the multifamily properties, we talked about current, I'm still long on those type of properties, but I'd like to get your input on that as well.
Yeah, definitely. I think, and again, seeing as I specialize in the multifamily sector, I think I share a little bit more of an optimistic view in terms of where values will stand in that sector. Obviously, retail, hospitality, of course, office have taken probably a bigger hit. I think it really goes down to, the capital that Erik was talking about, patient capital. Where is that capital going to go once the unknown has been lifted. Investors are obviously scared of the unknown. But what happens, after Q2, after Q3, when the economy starts reopening, retailers start reopening. I think there's going to be a stronger demand for defensive assets up until then. So, I think probably in the multifamily sector, maybe in the industrial sector. I definitely agree that there's going to be a decrease, in the short term, regardless of what asset class, including multifamily, for Q2, Q3. And then once this is more known and we, have kind of a stronghold on COVID, I think there's going to be a pent up demand in Q4, which will probably, go into 2021 and 2022. I mentioned it earlier, the fundamentals are still very strong. They were going into COVID. I think this is more of a situational recession. It's not based on the economy doing bad. It's not based on our GDP. It's not based on vacancy rates, because those are historically low. But I would tell you, even on the multifamily side, I think there's going to be more stringent underwriting, as Jonathan was saying, from the lenders. It's going to be on a case-by-case basis. Lenders may ask for, we've heard the term COVID rent rolls. How does your rent roll look like this month compared to last month? Show us your financial statements. Show us your balance sheet. It's going to be on a investor to investor basis. So I share an optimistic view on the multifamily sector. Collections have been good. I think it's a very defensive asset. As Jonathan mentioned, some of the CMB lenders are still active. And once the economy starts opening up, and once we actually, lift that unknown of this situation, I think we'll see some pent up demand towards the end of the year.
And we got two questions for you, actually, Sebastien. So,
sure.
The ongoing from Joseph. So, with the ongoing pressure facing the short-term rental market and lack of tourism, do you foresee these units converting to long-term rentals in the short term, and conservatively increasing supply of the rental units on the market?
Yeah, I think it's a great question, and I think it's a reality that we face on the market every day. You have groups, and I won't mention names, but that come and they have these great furnished suites for short-term tourism, weekly rentals, monthly rentals, whatever they may be, and we see these are very attractive to landlords. They produce good cash flow, they pay good rents, and they're paid on the first of the month. Obviously, with tourism slowing down now, those units are going to sit vacant, right? So what we have been seeing, and I think we will continue to see, is that those units, rather than sit vacant, are going to be transferred over to the long-term rental market. So these individuals who have 50, 100, 200 suites in different buildings, they're probably going to put those up for rent for 12 months. They're going to probably go into the traditional rental market. But again, as this lifts, as tourism comes back, whether it's towards the end of the year, next year, I think we're going to see strong demand in that sector, as we will on the rental side.
And yeah, I agree with you. I think there will be an increase in supply of that, and we'll see where the pricing goes, right? And Bill also asks, are you seeing deals out there a lot for like land development, for instance?
For what, sorry?
Land development.
Yeah. So we are. I would tell you again, in these uncertain times, it's hard to go to the city. It's hard to talk to the municipalities about zoning and densification. I would tell you that service lands that are already kind of in place zoning, are CCU approved with plans, and the projects are kind of given a green light. There's still very strong demand for that. These projects are generally projects that take anywhere between 12 and 36 months. So that's going to probably take place, and the shovel is going to go in the ground. This thing is going to be delivered way past this, hopefully after there's a vaccine and there's a kind of a stronghold on this COVID situation. We're still seeing strong demand on land. Mm-hmm. And I would tell you, once the economy starts reopening, municipalities, boroughs, and kind of the zoning offices, I would tell you there will still be a lot of buyers for that type of asset.
Great. And so, Chris, on your end, your outlook for the market, I guess you spoke about the legal aspect, where you think that most people will talk it out, but in the end, there will be some lawsuits out there. So, give me your take on that aspect.
I feel I feel that this is the first, like, it's a big global event in the age of this much access to information. So I just feel like we've been a little bit weighed down by everything that we're seeing, and all the dooms saying and all the optimists and what have you. But the reality is, like Seb said earlier, the fundamentals are good, right? The fundamentals of our economy, for the most part, aside from these huge bailouts and et cetera, things were generally going well. And I feel like we're going to be like restless horses out of the gate as soon as things start coming back to normal. So I'm pretty bullish. I'm optimistic. I have not seen deal flow slow down tremendously. I've seen different types of deals. I've seen companies that are owner operators decide, you know what, if I can do an off-market deal and put some cash on my balance sheet, why not? I think what this is a correction to the extent that the strong will get stronger, and the guys that maybe were punching above their weight are going to be thrown back, like go back down to go back down to the D League. We'll let you know when you're ready. There was a lot of cash. There was a lot of access to capital. I mean, I don't have to tell you, Teddy, between the banks, the B lenders, the institutional lenders, the life insurance companies, the private lenders, the guys that aren't private lenders but are lending other people's money. I mean, it was just like, it was a lot. And now I think people are going to take a step back and be a little bit more careful. And to something that you said earlier, I think that this opportunity affords companies and individuals the ability to really define themselves. I'm already seeing people come to me and being like, I'm not taking advantage of any of these programs, or I'm paying my rent, or it's like a badge of honor that, like, you know what, if I give my word or if I commit to something, I'm doing it. And you're going to see a lot of that, I think, and just in terms of when we come out of this. And it's generally going to be interesting. But look, deals that were being looked at were commitment letters or discussion papers. Most of them I've seen gone through. Banks are not necessarily starting new relationships, but they're not abandoning long-standing relationships. I think you're going to see a lot more off-market deals than what you're used to. I think everything was generally happening on market because of all that, friction that guys like Erik and Seb are able to create that bring up the price. But closing certainty today matters more than how much cash is in your pocket at the end of the day. And so it's going to be interesting to see how that affects valuations and how that affects deals.
Yeah, I agree with you. I think that there will be a quick uptick once things get back in, and I think that people do want to get back in as well, and they want to get back to normal as fast as possible. And so there might be a small, we're going to go down a little bit, but I think we're going to get back up there. So touched on the financing part, and on the financing part, I see that the banks are actually. They're working with the clients, existing clients. Obviously, they're working with them. They are trying to find solutions. They are supporting everybody, and I'm happy about that. That you need the banking system out there. So, Jonathan, on your end, maybe you can touch on that. Like, what is your outlook? I know, on my outlook, I think that it's a little bit tough, but I'm personally optimistic. I'm bullish on this. And how about your end? What do you think about that?
Right now, obviously, we're having some daily conversation with some banks, and everybody's telling me they're waiting for the month of May to see what how many defaults they will register. So basically, to see how many people are not paying their mortgages. That being said, they're adjusting policies on the way. So it's everything is waiting for an announcement. Everything is waiting for businesses to reopen. Now we're starting to see some. Gradually some stuff being put in place. But at the same time, we even have banks calling us to ask us what the others are doing. So basically, there's a lot of uncertainty in the market. A lot of people are asking questions. So, I mean, it's really where I'm taking on a day-to-day basis. And, I take that very seriously to make sure that I'm calling the right people every day, and to make sure that I'm updated on a regular basis for the policies and updates. Everything lending with the banks. So to me, especially we're talking about Sebastien was mentioning the CMB lenders. Right now, it's supposed to be a meeting mid-May, and then we're going to see if it's back to business as usual by June. So we're going to have an update pretty quickly on that. And another thing I want to touch base on is the 10-year versus the 5-year CMB rates. We've seen that gap, lately, and since pretty much 2017, that gap was pretty narrow. And now lately, we can see that, the cost of the mortgage bonds, the spread is much higher. So a lot of people are, instead of opting for the 10-year term right now, they're going for the 5-year. So that has an impact on the market as well, and on valuation too, because, CMHC doesn't have the same criteria as whether someone's gonna, go for a 10-year term versus a 5-year term. We know that the debt servicing coverage is not the same. CMHC is asking for 1.2 for a 10-year term versus, 1.3 for the 5-year term. So those are all questions we're getting on a daily basis, and we're constantly adjusting.
And so on that point, Jonathan, I think that it's important for people to know that there's many different avenues to get financing out there, not just through your specific bank that you've known all these years. And as Chris pointed to it as well, there's ways to get the deals done, not specifically through RBC, BMO, TD, whatever all the top banks are. You have alternative lenders, you have the privates, you have balance of sales. So I think that you working a combination in this market is really important, and it's a lot of it's short term. And I agree with all of you. I think it's a short term type of thing. It's not. The market fundamentals were very strong. They were very good. I don't think our prices were too expensive before the whole COVID thing. I think that we were well priced in our market. And so, from that point, it's like, maybe if you want to get a short-term type of financing, there are options out there to close those deals.
Well, a lot of people, and a lot of inquiries are about short-term, lending opportunities, because, the owners are they know that the rates have went out a bit lately, because truth of the matter, the banks they're pricing the risk right now. There's a bit of a liquidity shortage, and people were talking about Bank of Canada bringing the rates down, and they thought the commercial rates were going to follow, which they didn't really. There's a premium actually to pay because the banks are pricing accordingly to the risk. So that being said, there's still some cheap money out there. There's still some opportunities, and there's the guidelines are much stricter. I would say the bank, if you're looking for an exception to policy, you're not going to get it. People looking for refis. What I'm seeing is the banks are still making offers out there, but they're being more conservative when it comes to loan to value. Before, everybody was asking for 75%. Now we're seeing, banks want 65 and under. But there's still alternative lenders, that have, for them, they have similar rates than prior to COVID-19, and they're still being a bit more strict. But at the same time, they're offering opportunities to maybe, again, like you were mentioning, get a short-term loan going and get better loan to value than with the bigger institutions. So it's really case by case, and it's harder because you really need to come in more prepared about how you're going to adapt with the COVID reality. Who are your tenants? Who's paying you? Who's not? I don't know if it's Chris or Sebastien that mentioned that point, but it's not just about submitting a rent roll, and your personal information with the bank. It's really about being thorough with the information, with again, the impact it has on your rent roll, who your tenants are, who's paying, who's not. Did you strike a deal with some tenants? And again, it's you really have to work on your presentation right now.
Great. Well, thanks a lot for that, Jonathan. I do agree. I think that the sentiment is still pretty positive here, and that there are solutions out there. I think society is working together, trying to find solutions from the office space, the industrial, to multifamily, and I think that, honestly, on Chris's point, like, try to work it out, like the Chris Karambatsos method of trying to work it out between each other. If there are problems, is the key right now. And I think long term it is going to be a great market here, So I want to thank everybody for joining this. We are up at the hour. It's 3 o'clock now. So I want to thank everybody, Sebastien, Erik, Chris and Jonathan here. I did get some questions about the residential real estate market, and that I'll address on a separate webinar where we talk about houses, condos, and up to fourplexes. So that's another aspect there. But I really appreciate everybody's input, and if you do have questions, reach out to us. Thank you very much for listening.
Thank you, Teddy.
Thank you, Teddy, for putting this together.
Thank you, everybody. Have a great day. Stay
Thanks,
safe.
guys.
Thank you, guys. Teddy, are we staying for a Q&A or?